Hello traders, this is Dan and this is our post-market review for the weekly options trader on March 12th. Here are the spiders. Let's take a look at the broader markets like always, daily on the left, weekly on the right. We had our nice M top here. We picked up a lot of bearish trades at this turn here, inside day, under the inside day. We had a great week last night, booking 11 for 12 closed profits. Sell setup on the weekly. Now, again, we have kind of a deep retracement here, over 50% into last week's bearish engulfing bar. Small topping tail, narrow range day. Let's kind of just see what happens tomorrow. Qs were the relative strength, actually breaking out, negating that bearish engulfing bar. IWM the weakest, so if we want to short an index ETF, bear call credit spread, this is the one we picked on last week with the beautiful bearish 1, 2, 3. This will be our go-to again. Diamonds inside day, it kind of has to take out the lows there, so IWM's the best. In terms of closed trades, AGN, we had a put spread. And we've closed out into 3 different lots into strength today. So awesome management of that. We avoided 3 days of additional risk, 3.5 days. Closed it out this morning at close to maximum profit. Very nice trade there. Echo Alpha. Now, I think the theme for today is time decay. These 2 trades I'm going to show you, 2 of the 3 open ones, they've gone nowhere, and in fact Netflix went against us, and both of them were close to 50% max profit. That's why we love this strategy, folks. Selling out of the money calls and puts and spreads around compelling patterns. We entered Echo Alpha yesterday, March 11, on the breakout. The stock's against us. We sold the 95.89 put spread for this Friday. And the pattern is still fine as long as it holds the upper 50% of this bar, but the midpoint is 27 cents. We're at 50% of max profit in one day from volatility contraction and for time decay. We love that. We love saying, like on Netflix here, this bearish gap down from this after a false breakout. We sold an out-of-the-money bear call credit spread that expires this Friday. It's 3 days against us. And again, we're at 50% of max profit. The call spread expires, it's way out of the money, the 370, 380s. All it has to do is bobble around down here and just not go above our short strike by expiration, and we make our maximum profit. We sold it for 45 cents a share on a 10 lot, that's 450 bucks. And now I've tightened stop both on this and all 3 of our open trades to lock in a guaranteed profit. Finally, Roku was our only new trade for the day. It's in an uptrend daily, weekly, but look at why we made this recommendation. It made a new high yesterday, bearish 50% gap into that bar. We had a bearish intraday setup. We have a climactic sell setup on the weekly with a topping tail. And all we're doing is calling a short-term top, our specialty of the weekly options trader. We sold the 75.79 bear call credit spread for Friday, 45 cents a share. And once again, midpoint to close right now is 17 cents. We're at like 70% of max value in one day, 70% of max profit. So I've tightened the stop to today's high or the tighter or break even. But even if it does take out today's high, it should be at a nice profit. Hope that helped. As always, email me, dan@mastertrader.com, with any questions. Good trading. And once we get a little more confidence in a bearish turn, we will pick up the pace on more bear call credit spreads, just like we did last week. Good trading, everyone.